Welcome back, ladies and gentlemen, from that short break. And thank you so much for staying tuned on Smart 24 TV as we do drive your business. My name is Anthony, and I'm your host here on Financial Markets. We are going to look at the big stories here. But before we do so, just having a look at the Kenyan market here. The Nairobi Securities Exchange on the first weekday of trading at least had 43 out of the 66 companies trade, and the day ended with 18 gainers and 14 losers. A generally very good performance for the market. Regarding the performance of the NSE market indices, the all-share increased, the all-share index, consequent of the top gainers being higher than the losers, at least appreciated by 1.35 points, which was at a 1.46% improvement to close at 93.62. Points. However, the performance in 1 week and 4 week performance, as well as year-to-date losses, still leaves a lot to be desired. The NSE 20 and the NSE 10 also appreciated after following an increase of about 0.28 and 0.46% respectively on the Nairobi Securities Exchange. And when you look at the top gainers here, IGAD led with at least a 9.85% appreciation. Yes, indeed, IGAD put up a very good fight there. IGAD is a coffee development company that is dealing in the growing and selling of coffee in Kenya, with a total market value of at least about 449 million Kenyan shillings. It is amongst some of the small and medium enterprise businesses that have made their way up in the stock market here on the Nairobi Securities Exchange. Currently, the IGAD company has a 13.95 shillings, Kenyan shillings price. That is at a 1.25 appreciation from today's market performance. IGAD has put up a very good fight, and in year to date, it has at least appreciated by 33% and a 24% year-on-year performance. In terms of trading, they're the 45th most traded on stock over the past 3 months, after having traded at least close to 80,600 shares within the period. That is IGAD's for you there. Following IGAD's in performance was Stanbic Holdings with a 6.86% appreciation, as well as East African Cables with a 5.56% and Wumeme with 4.55% appreciation. Wumeme is cross-listed on Nairobi Securities Exchange, primarily listed here in the Uganda Stock Exchange, and it's doing well as well on the Nairobi Securities Exchange. Looking at the bottom losers, Standard Group came out last with an end-of-day depreciation of close to 9%, and followed by Centum Investments as well, with at least a depreciation of 2.35%. These two came in as some of the worst performers for the day today as we start the week. Safaricom, on the other hand, led the number of shares traded after recording 1.97 million shares trade, and it was followed strictly by Equity Group Holdings with a 1.05 million shares volume, and Kenya Power with at least 800,000 shares that were traded. Now let's have a look at some of the top stories here in regards to the markets here. Now, we have quite a number of buyouts and takeovers that have been taking place recently in the East African community. And one of them has been that of Cipla Quality Chemical Industries here in Uganda and Hima Cement. Now, these have, at least from top analysts, pushed the sectors to top acquisitions, at least in terms of the number of investors. A pair of unprecedented big takeover deals in Uganda industrial sector during the fourth quarter has exposed the low-hanging fruits in the manufacturing sector, changing the investor attitudes within the market to increase their appetite for risk. Previously, private equity and venture capital investment tracking reports show the country's financial services, information and communications technology, as well as real estate, have enjoyed most of the lion's share in terms of mergers and acquisition deals, with the manufacturing sector bringing up the rear. But latest takeovers announced by both Cipla Quality Chemical Industries and Hima Cement, which bear a collective bargain of value of more than $100 million US, have signaled a departure from the dull deal-making activity pegged to the local manufacturing sector. While Cipla showed signs of hunger for a commercial turnaround strategy after 5 years of stock market blues prior to the takeover, Hima Cement was reportedly keen to exit the local market after entry of so many aggressive rivals. Cipla is a local producer of drugs, and we know very well in Uganda they're the biggest producer of antiretrovirals, anti-malarials, anti-hepatitis B drugs, and the like. Cipla was acquired by Capital Works SSA in mid-November after regulatory approvals in a takeover deal that gave the American firm at least over 62.5% stake in the drug firm, valued at least $30 million US, according to the company sources. Now, currently, the pharmaceutical is listed on the Uganda Stock Exchange and has been listed since 2018. And one of the things that has challenged the company is, first of all, the intense pressure from falling revenues, the falling profits, and high operating costs. These have also seen the price of the company drop since the initial public offering at a 256 Ugandan shillings price, and now down to at least over 52.5 Ugandan shillings. Now that's close to about 79.7% drop in price since the initial public offer. The company's total assets revenue slightly grew from 120 billion Ugandan shillings in September 2022 to 121.22 billion Ugandan shillings, or $32 million US in September 2023, while the profit before tax fell from 22 billion Ugandan shillings to 7.1 billion Ugandan shillings during the period. And according to the firm, this drop in profit was mainly due to the payment that was made last year by Zambia, which was owing the company a lump sum after they supplied to the country ARVs, and they were unable to pay. Later, they paid up in the month preceding the close of 2022, and that puffed up their profits. Now, currently, the profits have fallen nearly by over at least 80%, from 22 billion to 7.1 billion. The firm's earnings per share also dropped from 79 Ugandan shillings in September 2022 to at least 0.79. Rather, they dropped from 3.79 to 0.97 in 2023 September. And its total assets increased from at least 213 billion in September to at least 2017 billion in September this year. When you look at the buyout by Cipla, the transaction was worth between 30 million to 35 million US. And clearly, this buyout promises so many growth opportunities for the company. As of course, according to sources, some of the former owners, Cipla India, Meditab, and the like, were actually they kind of monopolized the market, where Cipla Quality Chemicals was actually selling drugs, and that led to a decline in the revenues and the profits of the company, which wasn't a really good thing for Cipla Industries. Now, with the buyout, we are going to see more of this company going out into the local market and the private market as well. And that will actually be something to reckon with at Cipla Quality Chemical Industries. Now, in comparison, Hima Cement has exited at least also from the Ugandan market, and their exit is partly due to the rising competition in the cement manufacturing industry and the fears of low revenue margins as well as market share. Hima is a subsidiary of Kenya's Bamburi Cement Limited, and in turn is controlled by the Lafarge Holcim Group, which is a global cement production company. Under the takeover deal, Hima Cement, Cementia, as well as Sarai Group, Rimi Holdings Limited will jointly acquire the entire issued share capital of Hima Cement from Himsem, at least holdings amounting to at least 70% of the shareholding, while Cremesha will take at least 3% and the rest will take the remaining 5%. The total acquisition cost stands at least $120 million US, according to a corporate notice by Bamburi Cement. Although Hima Cement's latest financials were not available by press time right now, the local industry data points to rising production levels, compressed market share, and a diminished oligopoly environment within the markets. While total cement demand remained flat at 4.4 metric tons in 2021-2022 fiscal year, Uganda's total cement production capacity is projected to clock 8 metric tons by the end of 2023, according to an industry research note published by the International Cement Review in July 2023. Uganda's per capita of cement production consumption is estimated at least at 100 kilograms. And now comparing that with Kenya and Tanzania, in Kenya at least you have about 175 kilograms per capita, and in Tanzania you have about 110 kilograms per capita, which is relatively much higher consumption compared to Hima. And this would be, compared to Uganda, and this would be some of the reasons that Hima sought out this merger and buyout. We'll be analyzing more of these stories as we proceed, but allow me go furthermore into details with other stories coming in from Kenya, and one of them being the new listing rules for the Nairobi Securities Exchange. Now, companies seeking to list on the Nairobi Securities Exchange are coming to terms with the new listing rules that are most probably in favor of these companies. According to the new ruling, there has been a change in the requirement of the profit levels within the companies that would want to list. Formerly, under the listing rules, it was required that a company has at least 1 year of profitability or profits registered in the rather 3 years of profits registered in the past 5 years, and that has now changed to 1 year for the past 5 years, which is something that could actually spur initial public offerings. The changes are contained in the new listing rules and regulations on public offerings, listings and disclosures published by the Treasury Cabinet Secretary Mr. Njuguna Ndungu. And a prolonged tough operating environment, which started at the peak of COVID-19, could be one of the reasons that we have very few or no IPOs in the Kenyan market. Other factors could be the Russia-Ukrainian war, pressure coming in from the macroeconomics, and the rest. Due to these, there has been no initial public offering in the Kenyan market whatsoever in the past 7 years. The very last IPO we had was real estate investment trust known as Stanlib Fahari, and this was in 2015 in the month of October when this real estate income trust got listed on the exchange. The NSE has now the capacity to build more on its IPOs given the new regulations, and companies have in the past cited one of the reasons for staying away from listing as the tough listing requirements. The other point is that the good companies also would want to only list when they have challenges. That is according to Mr. Geoffrey Odundo, who is the chief executive of the Nairobi Securities Exchange. And he mentions a very clear point there that sometimes companies would only want to list when they have challenges. And that is not exactly the right time, at least as per the listing rules, for the company to list. In other stories, Kenya banks have also pleaded with the Central Bank of Kenya on raising the interest rate. Now, Kenyan banks have cautioned against any attempt by the Central Bank of Kenya to further raise interest rates, saying that the decision could be detrimental to the industry's stability in terms of the heightened credit risk and a build-up of non-performing loans in Kenya. The lenders, through a research note prepared by the Kenya Bankers Association, dated 29th November, say that the tight monetary policy stance adopted by the central bank could raise the interest rate from 9.5% to 10.5% in June this year, continues to be transmitted throughout the entire market, with market interest rates going up steadily across all sectors. Now, the Central Bank of Kenya's Monetary Policy Committee is set to meet tomorrow on the 5th of December to discuss more about this idea of the central bank rate. In view of the macroeconomic development and the balance of risk associated with the alternative policy actions, they have the view that sustaining the current monetary policy stance might be justified, and a further rate hike to tame potential inflationary pressures, if implemented fully by banks, would further escalate credit risk in the market and the build-up of the non-performing loans, with detrimental effects in the industry's stability. Very big story there. We'll be giving you what the Monetary Policy Committee meeting results will be like, but hopefully the cry for not increasing the rates will be heard by the different market participants or players within the Central Bank of Kenya. Now, in another story, Africa Development Bank, Africa's macroeconomic performance and outlook report has revised short to medium-term macroeconomic forecast for 2023 and 2024 to 3.4% and 4.3%, after coming from 4% and 4.3% respectively. This is due to the persistent long-term effects of COVID-19, as well as geopolitical tensions and conflicts, climate shocks, a global economic slowdown, and limited fiscal space for the nations to respond to shocks and sustain post-pandemic economic recoveries as well. Inflation currently averages 18.5% and 17.1% in 2023 and 2024 respectively. That is what we'll be expecting in a few months' time from now. Generally, that's it from our top stories. You can follow for more at Smart24 TV now on Twitter and give us feedback right there on what you think is holding back the markets in Kenya. Will the new listing rules that is, favor the new companies coming into the capital market space to raise capital? As you all know, primarily capital markets are there to support companies in terms of raising capital. Raising capital can be a very challenging thing, especially for companies that are starting. But the capital markets is always the haven or the safe haven for these for these institutions or companies, in order to be able to run away from the much higher risk, the much higher risk sources of capital, such as loans coming in from venture capital firms, as well as from banks. Could the new listing rules favor these new companies? You can share with us your comments on Twitter. We'll be very glad to have that feedback from you. Thank you so much for tuning in and for watching Smart24 TV. This is the first edition of the financial markets for the week. We'll be coming in again on another day with another edition. Stay with us. Have a lovely night. Good day.